What is going on, Aerial FX community? Hope y'all are doing well and enjoying your afternoon, morning, evening, wherever you are in the world. If you guys didn't get a chance to check out our episode 1 and 2 of our Smart Money Concepts videos, I highly recommend that. Some great content, and we're going to be dropping another one of these videos right now with some more great nuggets for you. So tune in, get your coffee, get your tea, get your juice, whatever gets you going, and let's get started. All right, I just want to go over a few pairs with you guys today: CAD JPY, USD JPY, and Euro USD. All right, so Smart Money Concepts 3, let's get it. All right, so CAD JPY on the 1 hour time frame. I do want to note that we are in a bearish trend, okay? Here we go. Structure is the most important thing. If you guys know Aerial FX, you guys know our structure is the biggest thing that we teach besides smart money, okay? You cannot trade smart money without understanding structure. Look, lower low, lower high, lower low, lower high. We naturally expect a lower low, correct? Okay, so that's in the bearish market. Now, what we have in here, yes, we do have a counter trend smart money concept play, and that's okay. If you have more room to pull back before going short, absolutely, you can take it. So for instance, right here, okay, we're in a counter trend right here. Look, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, higher high, okay? So now we broke counter trend right here, all right? So we should be pulling back, not necessarily to go long, because we're still in a bearish market, right? But maybe pull back just a little bit more and then drop, okay? So for the smart money concept type of entry, this is what we had. All right, we had a little bit of liquidity being built up here. We had this last sell to buy candle. All right, now I would not be taking this trade if we simply made a lower high, okay? Because we have to get back above this level first to be considered counter trend shift in momentum, okay? Shift in structure. All right, and that's what we got, okay? A break of the trend line is not simply a break like that. We have to get above this high first in order to consider ourselves bullish counter trend, all right? But we have to understand multi-time frame structure here, guys. This doesn't mean that if we break here, we're going to pull back and go long, like I said before, because we're overall bearish, you see? So we could easily just pull back just a little bit more, right? Make one more high, and then keep with the overall downtrend. See, lower low, lower high, and then lower low, something like that. This is why structure is so important. You got to understand where your targets are, okay? So in this case, we broke counter trend structure here, and we pulled back. Now, where's the sponsor candle? Well, it's not very clear, all right? This is not necessarily a sponsored candle because it never really took liquidity. I mean, it did take liquidity here, but they weren't clean equal lows, which in all reality, they don't have to be. But if we take some form of liquidity, have a massive push to the downside, and this isn't really massive, but it gets the job done, right? It takes liquidity and then a massive reaction back to the upside, and we engulf back to the upside here. Break of counter trend structure, pull back, mitigate. We kind of came down for a second tap, and then we went long. Yes, we ended up breaking to the upside here, but in all reality, you have to take this, you have to understand that we're still bearish. So you only can take it, a certain distance to the upside. All right. So I would have targeted right here, and actually I did target the negative 27, and I got out. That's it. Okay, because I was hoping that would make another leg to the downside because we are in a bearish market. Now in this case, we ended up going long here. All right, we ended up making a higher high, and check this out. All right, we made a higher high on the higher time frame. We broke this structure in here. See, this is the structure we had to break for us to actually go long to counteract this huge bearish move, right? You have to break this structure in here, all right, pull back and then go long to shift structure higher time frame, which is exactly what we did here. And look, this is perfect. Look at the zone, all right? Look at the zone. Support, a little bit of resistance, support, resistance, turns back into support. All right, pull your Fibonacci from the previous low to the new high, 61.8 in the zone. Perfect, enter right there. Yeah, your stop loss would have to be a little bit bigger than normal, but that's what you look for. You look for your structure, you look for your breaks in structure and your confluences, your zones, maybe an EMA. And if you didn't want to enter here and have a big stop loss, well, what you could have done was scaled in. This is what we teach our VIP members, all right, in more depth than what I'm going to be going over here. All right, because this is for the VIP, but I'm just going to give you a little bit of a breakdown and kind of what we look for. All right, so we saw that reaction from the 61.8 golden pocket fib, counter trend, lower low, lower high, lower low, lower high, failed to make a lower low here, made a higher high. All right, so we're shifting counter trend. Now this didn't really pull back into that desired location to where I was hoping to get. Okay, we never really came down into these discounted regions of price for me to buy it. But what you could have noticed was the fact that we did simply just retest the structure in here. Okay, this was the high that it formed that it broke. All right, so a simple retest of the structure point could easily go long. You would have had minimal drawdown. So instead of maybe a 50 pip, 40 pip stop loss in here, you could have had like, I don't know, a 20 pip, 15 pip stop, something like that. All right, then we made another move to the upside. Bang, right in here. Now, like I always tell my members, we always want to be buying at a discounted price. Discount is at least below the 50%, but did we get that? No, we didn't. Okay, but now we have to take a look at this. Did we retest structure at least? Yes, we did. Okay, we retested the structure in here. Now, if we break counter trend, we could potentially be taking this long. All right, so look at this. This is very discreet, but you can see it. Lower low, lower high, 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 lower low, higher high. All right, I really actually probably wouldn't consider that a swing point. All right, these are very discrete swing points, so this is more of a continuation. So we really have to get back above these swing points in here, which we did. Okay, we made a lower low, a lower high, a lower low, or not a lower low. We failed to make a lower low here. It made a higher high, so we broke this previous structure in here back into this zone of price here, as you can see. All right, resistance, support, support, resistance. This turned back into support and we went long. All you have to do, pull your fib from the low to the high. All right, this is your last down move before the up move. And this is not really a sponsored candle because we never took out liquidity, but I probably would have just targeted that region right in there. Probably not even the 61.8 because this last down close candle before the up move lined up with this zone of price here into that 50 to 61.8 region. And look, 1 hour time frame, 1 hour 50 EMA, perfect dynamic support, and we absolutely moon from there. Okay, so let's just put our risk to reward tool up there, and I'm going to calculate throughout this video just what you could have caught just between a few setups, a few pairs. And this is why I always say quality over quantity is going to be your best friend, guys. Okay, we do not trade every day. We look to trade every day, but that doesn't mean we do trade every day. All right, we have to be careful in how we trade. We have to be cautious in the way that we trade. Our rules have to be followed, have to be met. Confluences have to come around, and they all have to line up with one another. Okay, risk management's important, as you all know. All right, but we need all of these confluences to line up together. All right, in order to be able to take this trade. All right. Quality over quantity. That is the key. Now, we took a trade from here. All right. Long position. Would have had probably like, we'll say 18 pips. All right. Take profit would have been your negative 27 because technically we're still in a bearish market. All right. So that would have been, say, 1 to 5.3. All right. 1 to 5.3. So you would have gained 5.3% on your account if you risked 1%. Obviously, if you risk 2%, you would have gained 10.6. But we're going to go with 1% risk because that's what I use every single time. Now, again, we broke structure here. We took a long from here. Maybe not. Maybe you took a long from somewhere in here, but we're just going to go right there. All right. Pull a fib from there to there. That's where you enter. 61.8. Bang, right in that zone. Stop loss. Probably a little bit bigger. I would say probably around, let's just say 50 pips. Don't really like a 50 pip stop, but that's what we're going to go for in this case. All right, you would have targeted probably the negative 27, negative 61, probably a round figure, maybe 79, which lines up with around negative 61.8. All right, hit that basically to the T. All right, so that's another 1 to 4.8. All right, 4.8% on your account. Bang, done. Next, just delete some of this stuff here. We entered here, right at that blue mark. Oops. Get rid of that. There we go. Stop loss below the body closure here. So that's what, like 19 pips? Yep, that's about right. Perfect. Now we can target the higher time frame, negative 61 or negative 27, because this is a higher time frame play. All right. We now know that we're not going to come back below this level here. So higher time frame, negative 61, maybe 79.8 round number. All right, let's go 79.8. So about that price in there. 1 to 8.9, 8.9%. Guys, in the matter of, let's just get rid of this first so we can see it. right? In a matter of maybe 2 weeks, you just gained almost 20% on your account. All, right, all it is 2 weeks. This is just one pair, guys. Just one pair. All right, another one in here. I'll even do another one for you guys. I'm sure there's something in here. Let's just start with bar replay. Maybe something like that. Let's go to the 30 minutes, see what we can find. Perfect. Take of liquidity. Liquidity, equal lows. Purged. Broke structure. This was your structure. Higher high, higher low, higher high. Let's play this out. Well, let's just go to the 1 hour. Sponsor candle, nowhere. 45 minute, nowhere. Maybe 2 hour. Really don't see a clear one. I probably would have entered maybe at this imbalance right there. All right, let's see what happens. Bing. Perfect. Went. Let's scale back in. 30-minute time frame. Play it out again. And we ended up going long, I believe, from that point. All right, so would have taken a position right here. Let's see. Maybe the negative 27 we can target. Price stopped right there. See, this was the high that made this low in here. 61.8. Perfect. Look at that. Imbalance was the 61.8. Negative 27, negative 61. See if we play this out here. Bang. Perfect. Just kept mooning. 81.45. That would have been take profit. All right, let's mark it up, guys. This is what you guys do. And you can back test this too. This stuff works. This is really the only way, the proper way to trade. Okay? 24 pip stop loss. This is how the institutions trade. 81.45. Let's make this even. There we go. 1 to 4.73. Not the best risk to reward, but we're getting somewhere, right? Let's just make it 1 to 4.7. Let's get rid of this again. All right, now we can scale into this. Check it. 10-minute, because what we got here is our mitigation, or you could have gone here. That would have been a better mitigation right there. All right, but we're going to go to the sake of that 45-minute. That would have been your entry. 15-minute. Perfect. Again, guys, check this out. It's so prevalent right now. Look, equal lows, sell to buy. This sell candle mitigated the 15-minute candle right there to the T. Moon to the upside, breaking structure. This was the most recent high. We broke it with this. Pull back, mitigate to the T. Guys, I can't make this up now. I can't make it up. All right, but this zero drawdown right there. All right, here we go. Let's do it again. Where are we targeting? Higher time frame, right? 81.45, that was the higher time frame. 81.45, perfect. Stop loss below the low here. Let's just make it 27 pips, round it off. 1 to 3.4. Still not the best risk to reward, but that you would have played that out because that was a smart money entry. All right, perfect. That's CJ, guys. Let's see. We did 5.3, 4.8, 8.9, 4.7, 3.4. I don't know what that is. About 12, 13, 18, 22, 26, 25, 20, 26. Let's say 26%. This all happened probably within 3 weeks of trading. 26% on your account in 3 weeks trading one pair. This is one pair, guys. This stuff is seen all the time. You just got to keep an eye out for it. Look for your liquidity runs. Look for your pools of liquidity that get purged, and the structure is broken to the upside or downside depending on which direction you're trading. A pullback into that zone to mitigate some sort of candle of interest or fill in some sort of imbalance. All right, take a long or short position, again, depending on what direction you're trading. And then bang, target the negative 27, the negative 61, maybe target a higher time frame imbalance. All right, something like that, higher time frame sponsor candle to get your targets. Obviously, stop loss below where the imbalance was filled or below the body closure of the sponsor candle. All right, next pair, USDJPY, 4 hour time frame. Higher time frame, guys. We got to do our higher time frame analysis. Here we go. Here it is. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, up, higher high, higher low, higher high. Markets love to move in 3 drive cycles. Always tell my members 1 drive, 2 drive, 3 drive. Loves to do that. Okay, so I saw this 1 drive, 2 drive, and then guess what we did? We formed liquidity. Banks love to do this. They love to form liquidity before pulling back all the way or mitigating something else. So in this case, they knew they had to pull back, have an overall pullback on a higher time frame before moving another expansionary move. So what do? They generate some pool of liquidity here, okay? Because they know they have to pull back more, right? we pull our fib from the low to the high, yes, we have to at least come to the 50% like we did, but I like the 61.71 region, exactly where we came to. I would have probably not placed a limit here, all right, because that would have been a big stop loss, but I would have found something else, maybe a lower time frame break of structure, or at least make equal highs, which I'll get to in a minute, and then pull back and then go long from there. We had 2 entries on this, I think, just within a few hours, guys, just within a few hours. All right, so the liquidity was taken. All right, we're looking for that third drive, that highest probability drive into the high. Again, break of structure in here, okay, higher high. So we broke the structure, we have now shifted structure. We should expect a higher low, which we got, and then the higher high, and then the 3 drive cycle to the high. All right, so now scaling into this. Actually, let me just go to bar replay, makes it easier. Bar replay, 1 hour time frame. Let's play it out, see what we can see. Perfect, right here. This is the candle that took liquidity, this hourly candle. Perfect. Guess what it lines up with? This demand level in here. Maybe what else does it line up with? 61.8, potentially? Yeah, it does, to the T. Look at that. And look, so here's the thing, guys. Yes, we saw this liquidity be purged, right? But if this pulled back maybe right into here and started to go down, I would not buy it here, because technically we're still in a downtrend, counter trend. We have to at least make equal highs, which we came up to. At least make equal highs or break structure higher high to then have a higher low, and then we go. All right, but we at least made equal highs, meaning there's liquidity resting above here. So now we have to go take that liquidity, which in this case we will. All right, because they're equal highs. This is a retail trader's resistance level. This is why retail trader resistance support, they don't work. They will always be taken. All right, if you're a retail trader and you're watching this video, do you often find yourself losing a lot? That's probably why. The banks are going against you. The banks literally trade to take your stop loss. That is why they are in business. Okay, so retail trading doesn't work. Now, where are we going to set our entry? Right in here, 61.8 into this zone. Take a liquidity, sell to buy. All right, long position. Stop loss in this case has to be below this low, not below the low, maybe just below the body of this liquidity run candle. So we'll say 25 pips in this case. 25 pips, just about right, perfect. Negative 61, 1084. I might go 1085. That's a half level. We'll make it back up. If we're going to go all the way back up here, we're going to make it back up to 1085. It's a half level. Banks love to trade off of round numbers. All right, so that is a 1 to 4.4. I'll just write that in because I already know this actually worked out. And I actually took this trade myself. I actually took 2 trades, and I'll show you what I did in a minute. We came all the way down. Bang, perfect. Now, what can we do now? 30-minute time frame, we can scale in. Maybe we have a counter trend break. So let's say you miss this. Let's say you miss this point here, right? Well, you can still get in. Look at the counter trend. Check this out. Lower low, lower high, lower low, lower high, lower low, higher high. Broke the structure. Oops, excuse me. Broke the structure. We want to see a pullback to go long. This is where you have to scale in, scale out, and try to find your sponsor candle. In this case, there's really no sponsor candle in here. I don't really see an obvious one. 45-minute. Nothing much. Hourly. There it is. Perfect. Okay, sponsor candle. Little to no wick at all. I like to say 0 wick because I don't like wicks when sponsor candles come around. Because wicks mean more sell to buys or buys to sell. Okay, because think about it. If there's going to be a wick in here, prices selling and then buying at the same time. All right, so in this case, I already checked lower time frame. There's nothing in here, so we can place stop loss below the body here. All right, but that is where your sponsor candle is. Okay, so we'll have another entry. I'll clone this. In this case, 107.53. Stop loss below the body. All right, we can target that higher time frame play. In this case, this will be like, let's make this 13 pips. Higher time frame, so what is this, 108.50? Bang, right there. What is this going to be? 1 to 7 point, I'll say 1 to 7.5. This is about right. 7.5%. Play it out. Bang, to the T. Hit it again. Rose, mooned. Look at that. I don't make this up, guys. All right, we took both of these trades. I took this trade, and the VIP took this trade. All right, absolutely mooned. VIP actually took the other CAD JPY trades as well. All right, last one I want to go over with you guys is Euro USD. All right, so I'm going to get rid of this, and I'm actually going to go over the setup with you guys. I'm going to give you a live trade setup here. All right, I'll delete this for now. Get rid of that bar replay. Now, you have to go to a higher time frame. Let me show you what happened. So we can see that price came up, took all this liquidity in here. We took it all, and we fell to the downside, creating a lower low. So we would expect a lower high and then a lower low. All right. So where do we enter? Well, we have to enter at premium prices because we don't want to be buying at discounts. Discounts meaning below the 50%. We don't want to be buying or selling below this level, at least above the 50%. All right. And I can notice that we had our last buy to sell move in here. All right. Now I also say that, well, this already mitigated. Well, yeah, it did mitigate, but it could come up again. That's why we have our overall pullbacks. All right, we actually came up a little bit higher, and we actually hit. There's a 4-hour imbalance like right in here. I think it was around 1.142. We hit it to the T basically. All right, so that was where our area of interest is to be looking for shorts now. Okay, so now let's scale in. 4-hour. What do we notice? Well, price kept trickling up. We had this push, so higher high, higher low, higher high, up, lower low. We took out the structure in here. We want to see a pullback and then go short. Where do we pull back to? All right, now let's pull our fib. High to the low, 61.8. There's a zone in price in here. You can see how I go from the closures to the closure here. All right, and we came into the T, right around the 61.8, 1.1350. Let's mark this off so you can see it, 1.1350, round number, bang. Now, you can enter here. This actually happens to be, now let's get rid of this really quick. All right, let's get rid of all of it. This actually happens to be the 4-hour imbalance. Check it, 4-hour imbalance. Basically to the T hit. And 4-hour buy to sell. All right, so you could have placed stop above here, but there was a better entry if you scaled in. You can scale in, guys. This is why I always say, all right, look for your higher time frame areas of interest, which is right in here, and scale into it. All right, let's do it. Bar replay, right in here. We're going to go to the 45-minute, start playing it out. Okay, we're going to go to the 3-minute now because it happened to be in the 3-minute. Right, what is price doing in that area of interest? Actually, let me go back to the 4-hour, and I'm going to mark up this 4-hour inefficiency fill, 3-minute time frame. All right, we have not hit that 4-hour inefficiency fill. That doesn't mean I want to come up and sell it from here. It's just a good potential indication that we could be going short if we do, again, take out these equal highs because we're forming equal highs, right? So before price comes into a higher time frame area of interest, whether that be a sponsored candle or an imbalance, usually it forms some pool of liquidity, in this case equal highs, to try to get people to sell, just so it can come up and take it and then mitigate, because they're going to come up here anyways, or maybe a little higher or whatever, but they want to take money in the process. So it's exactly what happens. Play it out. Oh, buy to sell. Okay, now this doesn't mean that we just pull back from here and mitigate. We have to break structure first, like I always say. Confirm it. Break the structure. We break this, make a lower low. We can expect a lower high, and we can mitigate this level, which in this case I think we did. Yeah, we did. Came lower too, I think. Yeah. So we really confirm that lower low. We can pull our fib from the high to the low. Where are we coming into? 71.78. Premium prices, guys. Okay, you can see take of liquidity. Hit that 4-hour imbalance to the T basically and fell. Remember, this is the 3-minute. All right. So now let's do it. 8 pip stop. Oops. Go back. 5, 8 pips. Now take profit we'll do in a minute, but I just want to show you the entry. Came up, bang, basically to the T, and then we just fell from there. All right, and play it out a little bit, show you. There you go. All right, you could have had other entries. You could have one here, this last buy to sell, and here. There's a 50% of an imbalance in here you could have had. So yeah, there's multiple entries, guys. You just got to look for them. Okay. So now let's scale back out. See what we can find for higher time frame targets. So this is what you do: higher time frame area of interest, lower time frame entry, higher time frame target levels. All right. Negative 27, 1.1156. And I will say that I don't know if this happened to hit. I think it came down and then it moved up a little bit, but it ended up coming back down to hit that level. So 1.1156, let's go back to the 3-minute. 1.1156. 1 to 23.5. 1 to 23.5. I'm writing this all down so I can calculate it afterwards and show you guys. All right, so let's get rid of all this first, and we'll play it out from here. Go to a higher time frame and play it. All right, let's just play this out. And did we hit it? Not quite. We came back up. Probably would have hit break even there. You would have been break even for sure, but you would have definitely have taken partials within here. So let's just do this. Instead of a 1 to 23.5, I'll make it even for you guys. All right, I'll be transparent. All right, I'm not going to calculate something if it's not going to be real. I think it happened to be over here. Yeah, perfect. All right, so we're going to go to equal lows. And we'll make it a 1 to 16.5. All right, because that's what really happened. Because you would have taken partials up to 0%. That's always what you do. 0%, you take partials, move stop to break even, then you target negative 27, negative 61. All right, so in this case, it would have been a 1 to 16.5, let's just say. But still, 16% on risking 1% is pretty damn good. All right, now we can get rid of all this. Let's delete it all. Exit out of it. All right, now where are we? In here. Price is in here, but I want to focus on price in here because we took another trade. VIP actually took this one as well. Right, 1 hour time frame. This is your zone of interest right in here. You can see support, resistance, 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 support, support, resistance, resistance. This is supply. All right, all this is supply right in here. We have supply. Oh, we broke supply. Many people would be, oh, we broke. All right, we're going long. We had a breaker. We made a higher high. Well, this is why I always wait to see what happens, because we could easily push back to the downside and engulf back to the downside like we did. Or we could maybe retest and then keep trickling back up and actually keep going with trend. Well, in this case, counter trend because we're bearish. But I was favoring shorts because 1, the dollar was strong at the time, and 2, we're in a bearish trend. All right, dollar strength means euro USD weakness, euro USD push down. All right, so we broke to the upside, faked people out. I saw this, we scaled in, and it happened to be on the 10-minute. Right in here, faked out of supply. Equal highs, right in here, guys. Right in here. I'll just delete that for you. Equal highs, very discreet, but we took them. All right, lower low, lower high, lower low. 1 drive, 2 drive, looking for that 3rd drive. Guess what? Lower low, come back, mitigate it after taking those equal highs. Perfect New York session time around 10 o'clock. This formed at 8:30. Perfect fake out. Okay, 7 to 9 a.m. Eastern Standard Time is when you have your New York fake outs. Again, fake out meaning maybe liquidity run, fake out of the Asian range, something like that. Excuse me, not Asian range, London session range, or London session lower high. All right, so we had this push, we took out liquidity, we fell to the downside, we pulled back, we mitigated. Now where would you target? Well, pull my fib. Negative 27 would be your first, negative 61 would be your second. We never reached the negative 60, well, actually we did in here. We actually did that. That took a little bit longer than I would have hoped. So this would have been a, look at that, it's a round number entry to 1.128. This would have been a 15 pip stop. Yeah, we did take this as a matter of fact, and we gained about 4% on our account. 1.113, I would do 1.1221. So 1 to 3.93 was rounded to 1 to 4%. So 4% on your account right there. I'll write this down. All right, so we got that one. Now let's delete this again. 4%, bing. This is 3 pairs so far, guys. One over 3 pairs, higher time frame. Now price came all the way back up again. We started trending up. All right. Now we saw right in here we formed equal highs. All right, equal highs in here. High, 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 high. Look what we did. We purged the equal highs. Buy to sell. Again, you don't want to be buying in here. Retail traders are going to be buying. Oh, we broke resistance. We're going to go long. Well, no, we just took liquidity. Okay. Well, we could go long, but we would need to have seen the break, retest, and then the follow through. We never got that. We engulfed back to the downside here. Right. So our entry is not on simply just the closure of this buy to sell candle. We have to wait for some sort of structure to break. So I'm just going to scale into the 2 hour because this is where we had our entry. And our structure was right here. Now I always say to you guys, I'm like, hey, you have to wait for either equal lows to form, right? In this case they were, or lower low. I wanted to see a lower low and a close below this level first, but we at least made equal lows, so we know that price is going to come further down to take those equal lows out. Now I saw that, oops, get rid of that. I saw that when we had this buy to sell, we came up and we mitigated. Now, I would not have sold it right here. I probably wouldn't have, in my opinion. It wouldn't have been a bad sell because you are looking to short, but I really wanted the higher time frame break or equal low to be formed first and then the pullback. All right, so if you got in here, and I know a couple of our VIP members did, and congratulations to you guys. You guys caught a great trade. But in all reality, I probably would have entered right here, which we did. Send out this trade this morning. This is July the 10th, 2020. We sent this out for New York session. All right, we hit around 9 o'clock, again, prime New York session time. All right, I'll scale back out to the 1 hourly. Perfect entry, minimal drawdown, and we're pushing down. The markets are now closed, but we are looking for continuations to the downside. All right, so that is your trade of the week. All right, for you guys, maybe if you see this early enough, maybe you can potentially look for re-entries, maybe a pullback of some sort, and then a continuation to the downside, because we are now higher time frame bearish. All right, we are going to continue lower, in my opinion. All right, I have a strong opinion about this one. I'm confident in this trade, and I do think we will continue lower. All right, so that was my take on Euro USD, guys. I hope you enjoyed this episode, Smart Money Concepts 3 for Aerial FX. All right, there's plenty more where that came from. Our course will be coming out late August. We're hoping around August 28th is when we're going to be releasing it. All right, so for inquiry, please DM us. We will give you more details about that. All right, so I hope you enjoyed this video. I hope you took something from it. I hope you took some notes. Please feel free to go back and look at episode 1, 2, and even watch this one again. And if you have any questions, guys, please feel free to let us know. All right, we're always here to help you guys. VIP, we go into more detail about how we trade, specifically smart money, but we do have our own twist, our own style to it. Okay, we do have some more things that I'm not sharing personally with you guys because this is free content. This is the YouTube. If you'd like to subscribe to Aerial FX, please DM us and get signed up. Okay, we'll be happy to get you signed up, and then we can do some one-on-one sessions with you guys, do some live trading, and get going. Okay, because we do all that stuff. All right, the course will be coming out again late August. Again, if you have any questions, please feel free. Aerial FX, so ARIEL__FX. Okay, it's double underscore for our IG Telegram. It's Aerial FX Trading. All right. Thank you guys for tuning in. Hope you guys enjoyed this, and we'll see you in the next video. Thanks.